Shippers, meanwhile, starting to divert tens of billions of dollars worth of cargo away from the Red Sea as they face the threat of attacks from Iran-based Houthi militants in Yemen. Yemen reports over the past few days say that the U.S. is weighing military strikes on the rebels. Joining us now with more on the disruption to global commerce, Urs Dur, principal at Zuoz Industrial, a global maritime shipping consulting firm. And we've talked about it almost as if we can sort of assume that there will be there will be material changes to global trade. Do we know that yet, Urs?
Yeah, we do. With Maersk and Hapag-Lloyd now avoiding the Suez Canal, LNG shipments through the Suez Canal are going to be down about 18% this month. So there's a real impact. There's nobody wants to get involved in the violence, and this is an effort by the Houthis, in my opinion, to disrupt global trade. It's not simply about the tragedy that is occurring in Israel. So it is really fundamentally changing things for the Suez Canal for the near term. And then don't forget the Panama Canal has drought, and that's running at less than 60% of capacity. So global trade is disrupted there, too. So it's good for shipping freight rates.
So can we just assume it's inflationary, or if it was to cause some type of slowdown in certain economies because of supply chain disruption, could it be deflationary? Or is it both?
It's going to raise costs for transportation. $1 trillion worth of goods go through the Suez Canal annually. Panama Canal is also, again, disrupted. So ships have to take longer routes to get there. And coming from Asia to Europe with containers to go around, that adds about 40% to your journey. You burn 30 to 40 tons per day of fuel. It costs more money. It extends ton mile demand for ships, and then therefore there's less ships around, so ship rates will go up. That inevitably, some of that gets passed on to the consumer, but this is a disruption, and shipping often benefits from disruption. Even though it's not a nice thing to think about.
Right, like insurance companies sometimes benefit when they raise rates after catastrophe. So how would you, if you were to, like, for example, Maersk, how is that stock? More attractive, less attractive? What would you do?
Well, it's a very big company, and I don't necessarily pick stocks. I think the rates that they will achieve on their container ships will improve if there's a longer disruption. But in terms of Maersk, it's a very large company with a lot of different interests. I think what's more interesting, and I'm not going to name any names, but the order book for tankers and for dry bulk ships is very low. And on top of it, you have this disruption, and 30% of the fleet is over 15 years of age, less efficient, and facing more and more emissions restrictions. So you're going to have demand exceeding supply for tankers and dry bulk for the next couple of years. So it looks very interesting from that perspective.
Yeah, I wonder whether we do come around to that overall view that instead of this being a one-off due to what happened on October 7th, maybe things you throw in, what's happening in Ukraine and whether the entire Middle East, when you think of Iran and some of the things that the troublemaking that they're involved with, over 100 attacks on U.S. troops. This could be a permanent state of affairs, like you say, maybe for a couple of years. Maybe it's not something that just quiets down in a matter of weeks.
Well, without these disruptions, supply would exceed demand for dry bulk and tankers for some period of time coming forward, at least I would say 24 months. With the disruptions, it exacerbates that. Then you have emissions control on older ships, which constricts supply further because those ships have to go slower in order to meet emissions restrictions. So you have all of these things coming together for cargo shipping. Container shipping, there are a lot of ships on order back due to the disruptions that we had from COVID. So there are a lot of ships that are going to deliver on that side, but still they're going to have to go farther. But again, I agree with you that, well, not agree with you, but as you mentioned, this is a broader attempt to disrupt global trade. This is not simply about a horrible tragedy and war in one region. Ukraine has a big impact on grain exports, though that grain now may not be able to go through the Suez Canal to get to Asia. It has to go around. U.S. grain isn't going through the Panama Canal as much, so it's going around, and it wanted to use the Suez, but now it has to go around, right? Or maybe. So let's see what happens. But this is a broader attempt by, I would call them, nefarious actors who want to disrupt global trade. It's not simply one region.
Urs, we've got to end it there, but do you think this means higher oil prices down the road, no matter what, or it just depends on other supply areas?
Yeah, I think it depends on other supply areas, but I think you're going to have higher freight costs, and that does trickle down to the consumer. In terms of consumption of oil, you got to consume more oil to go around. Let's see how long and sustained it is. It probably won't have much of an impact in the very near term.